you have to hope, if you're waiting to buy cheap gold, you have to be betting that the dollar gets more valuable. And I just think that's a slim possibility. I mean, it may get more valuable relative to the yen or the euro, but not gold.
Hey everyone, welcome to Bald Guy Money. I am Bald Guy, and I want to start this video off by thanking everyone who watched last week's gold analysis video, and you can see what we discussed here on the screen. Now, for those of you who requested that I repeat the same analysis for silver, I will be doing that in next week's video, so please stay tuned for that. But this week, I have the pleasure of presenting an in-depth discussion I had with investor, economic commentator, and precious metals expert Peter Schiff, and in it, we discussed the next move up for the prices of silver and gold. We touched on why the Federal Reserve and other central banks around the world aren't taking inflation seriously enough. Peter also gives a great explanation of what the price of gold is telling us, and if the United States has a backup plan that includes gold to keep the USA in power over the world's reserve currency. We also discussed BRICS and their role in the precious metals market, as well as mining stocks, and if they still have the potential to keep moving up. So there is literally something for everyone in this video and a lot to be learned. So make sure you watch the entire discussion, because even as we were wrapping up, Peter was adding some very interesting points to the discussion that he wanted you all to be aware of. Now, just before we get started, if you're in the United States and want to buy gold or silver to protect the value of your hard-earned money, please check out channel partner Pimbex at pimbex.com. They have great prices, they're reputable dealers, and they have fantastic customer service. They can also get you started with a gold and silver IRA. Just call them at the number on the screen and let them know you came from the Bald Guy Money channel. And without any further ado, here is my discussion with Peter Schiff. Welcome, Peter. I don't really think I need to introduce you to my audience, but just in case someone has been who has just crawled out from under a rock, I am honored to be hosting the one and only Peter Schiff on Bald Guy Money today. He is an investor, sound money advocate, host of the Peter Schiff Show, which I will link up in the video description below. And Peter was labeled Dr. Doom by the New York Times for his prediction of the 2007-2008 crisis. Peter, how did I do? Is there anything you'd like to add to that intro?
No, Roger, thanks a lot. Unfortunately, I'm not quite bald yet. I mean, I'm getting there. I mean, I got a very high hairline, so I'm not sure if that qualifies to be on the podcast. But yeah, I mean, a lot of people don't necessarily know who I am. I mean, some people do. I mean, more people do than used to, thanks to social media. A lot of people have found out about me because of the podcasts that I do, or because I spend a lot of time doing other people's podcasts, like the Ball Guys podcast. So I've been doing that for a number of years. I now finally have more than 1 million people following me on X, what used to be Twitter. But still, I think I got a long way to go before I'm genuinely a household name. I think I may get there, but unfortunately, things are going to get a lot worse in the economy before that happens.
I'm with you right on that topic. Now, we'll get to that in a second. I just wanted to start off with a question here, because we're in a bit of a consolidation period right now for gold and silver. Peter, considering everything that's going on in the world right now, I'd love to know what you think the next catalyst, the catalyst for the next big move on metals will be.
Well, I think we've already broken out as far as gold hit a new all-time high. And we took out a lot of the resistance that was overhanging the market just above $2,000 an ounce. So we got above 2,400. So I think gold really has support just under 2,300 now. I think we've moved up to a level where we're now seeing support above what used to be resistance. But what might be the catalyst for a more substantial move that will get the price of gold to 3,000 and beyond would probably be the realization that inflation is not going back down to 2%, and that the Fed is going to stop trying to get it there, or at least pretending that it's trying. I think the markets right now still are harboring this fantasy that a return to 2% inflation is possible. In fact, if you look at the break evens on 30-year treasuries and tips, investors are expecting inflation to average 2.3% for the next 30 years. I mean, that is a complete pipe dream that that's going to happen. You know, the low inflation that we've had since the '08 financial crisis, that's an aberration. That's the exception, not the rule. You look at the 40 years before the 2008 financial crisis, inflation averaged close to 5% a year. And you know, the Fed never had a 2% inflation target when inflation was above 2%. The entire history of that target existed when inflation was below 2%. That's why they made it up. They used it as a justification to create more inflation because they claimed it wasn't high enough because we were still below 2%. But because they created so much inflation to get us back up to 2%, we're now way above it and we're never going back down to it. And the Fed doesn't have the political will to do what's necessary, because if they really wanted 2% inflation, they wouldn't have stopped hiking rates. They have a long way to go up. And Powell would not be telling Congress that he doesn't care about budget deficits and that he can't criticize them. He would be laying into the government for running these deficits, because there's no way we're going back to 2% inflation with $2, $3, $4 trillion a year budget deficits. It's just not even possible. So if Powell is not willing to stand up and do what's right and criticize Congress for doing what's wrong, there's no chance of 2% inflation. So when the markets get their arms around this, they're going to have to reprice gold much, much higher.
Okay, so that's a really great point, because I've been talking about that a lot on the channel recently. So, let's dig into that a little bit. Inflation remains high, but when I'm looking at the market, and especially the latest comments by Jerome Powell, it seems to me that there's increasing pressure on the Federal Reserve to ease on rates, despite the fact that inflation is not even close to tamed.
Yeah.
Now, you've got issues with the banks severely underwater on bonds. You've got pressure from the Biden administration to save the market before the election, not to mention the huge interest payment burden that the high rates are putting on the federal government's debt. And you've also got the ticking time bomb in Japan that may force them to dump more US debt on the market to prop up the yen. Tell me, Peter, is there any chance the Fed will simply ignore inflation and deliver cuts earlier than the market's currently expecting?
Well, the Fed will absolutely ignore inflation. Will it deliver cuts before or after the markets are expecting? That I don't know. But it makes sense that everybody is, agitating the Fed for inflation, because everybody's addicted to it. Because the Fed used inflation to keep interest rates so low for so long, everybody has grown an addiction to the cheap money. And when you take away the cheap money, obviously the addicts are going to demand more of it. They're starting to have withdrawal. We're seeing banks fail. We're seeing pressure now on the stock market. Debtors are feeling the pinch of rising interest rates. Consumers, not only are they dealing with rising prices for food and energy and everything else, but the cost of paying interest on their debts has also gone up a lot. So everybody wants the Fed to reduce rates, and so eventually they will. But they can't reduce rates to prop up an overly leveraged economy and fight inflation. They're mutually exclusive. In fact, when they try to bail out the debtors by printing money, they're conceding and they're losing the war on inflation. Inflation wins, and it's going to accelerate to a whole new level.
So, keeping on the topic of the Federal Reserve, anyone with eyes can see, and you mentioned it, that the US debt situation is getting out of hand. US bonds are becoming less attractive for foreign central banks as the US weaponizes the dollar. Now, I assume some people in the Federal Reserve can see the writings on the wall. I can't imagine that everybody in the Federal Reserve is brain dead. They have to have a few intelligent people, at least, who can recognize this trend and where this is likely going. Now, one of my Patreon members, Kevin, was asking about your opinion on why the US Federal Reserve isn't increasing its gold reserves, especially if they have the ability to print the dollars they need to purchase it.
Well, first of all, I think that's the last thing the U.S. government wants, is to help push the price of gold higher. because a rising gold price is a bad sign for the dollar and its role as the world's reserve currency. I mean, the dollar's primary competitor is gold. You know, central banks have a choice. They can own gold or they can own dollars. And more central banks are choosing to sell dollars to buy gold. And so if the US Treasury joined the gold buying party, that would put even more upward pressure on gold and create even greater incentives to buy it. And of course, that would send the wrong message, right? If the U.S. started buying gold, imagine the message that sounds. That's like, the policemen are having to, call in the police to protect themselves, right? I mean, it would send a message that things are not great because we're telling everybody how great everything is. It's a great economy, the strongest U.S. economy. Inflation is going back down. So why would the U.S. be buying gold? It would be sending a mixed message to the world. Ignore what we're saying. Look at what we're doing, right? We could say one thing, but we're doing the opposite by buying gold. So that's not going to happen. We should be buying gold. We probably don't have nearly enough, but it's more likely that we might start selling our gold. I'm not even sure how much we've got left. But if the dollar, or when the dollar rather, really starts coming into attack, we'll blow through our foreign exchange reserves very quickly. We don't have that much as far as how many euros we have, or yen, or pounds. So we may end up having to sell gold. We'll see. But I think that's more likely than that we start buying.
Okay, so considering what I mentioned also in the previous question about weaponization of the dollar and other central banks, non-US, non-Federal Reserve, increasing their gold reserves, there has been a lot of speculation that the BRICS countries are going to lead the world into a new era of sound money with a new gold-backed currency or commodity-backed currency. Now, I've been skeptical about the BRICS' ability to do this, and I even question if that's a function of the BRICS. Like, what is the BRICS? Is it like NATO? Is it like NAFTA? Is it like the European Union? Or is it like all of those things rolled into one? Because I think a lot of people in the precious metal space pin a lot of hopes, at least the average observer, on BRICS to be able to pull this off and, again, make a return to sound money. So I'd like to hear your take on the BRICS. Do people in the gold and silver space make too much of it in that they are just as addicted to fiat as everybody else? Or do you think the BRICS
No.
will actually trigger a significant shift in the global financial system?
Well, I think the world is going to go back to a gold standard based on its own self-interest, whether it's led by the BRICS or not. Because the current monetary system doesn't work. I mean, it works for some people like the United States because we are the beneficiaries of this deal. But the rest of the world has to pay the price, suffer the burden. They have to run huge trade surpluses and accumulate dollars. And then they have to loan us those dollars in perpetuity and never expect to get repaid because we can't. And so the world has to live beneath its means to enable Americans to live beyond their means. The rest of the world has to consume and save, and then make that available to the U.S. and finance these huge trade deficits that we have with everybody. And this is causing all sorts of problems. Not only the drain on the resources of these economies, but by keeping interest rates artificially low to help sustain the dollar, they also end up with asset bubbles and misallocations of resources, and they screw up their own economy. So we're exporting our bad monetary policy all around the world. And I think the sooner the world rejects the dollar as a reserve currency and moves on to sound money, the better off they're going to be. Now, of course, that's when the pain really begins in the United States, and we have to start behaving like a normal economy again. We have to start producing before we can consume. We have to start saving before we can borrow. And that transition is going to, mean a lot of losses, a lot of financial pain, maybe even civil unrest. It's going to be a difficult adjustment for America to make. But the sooner we make it, the better. I mean, the longer we succeed in delaying the day of reckoning, the more we have to reckon with. And so the more difficult it is. But it's going to happen. It is inevitable. So I'd rather deal with it now, as bad as it is, than deal with it later when it's even worse. But the politicians would rather deal with it later because they may not be in office later, so they don't give a damn, right? They just care about themselves. That's why they went into politics, right? They couldn't give a damn about anybody else, and they don't care about the country. And so they're going to keep on postponing this until they can't postpone it anymore because there's a crisis. And the crisis will take the form of a sovereign debt and a dollar crisis. But I think if you look at the big buyers of gold, the reason gold broke out to a new high, it's not that American public has been buying gold, though they've been selling. It's a lot of these BRICS central banks that have been the main buyers of gold all year and last year too.
It's funny because, before I came on, I was asking some of my Patreon members also for questions for you. And one of my Patreon members, Attila, was asking, and it's funny that you brought it up. Do you think the Federal Reserve has a plan B? Do you think they have a plan for when something like what you're describing happens to the dollar? Or do you think they're convinced that the dollar is immortal?
Yeah, I mean, I don't know that they are smart enough to have a plan B, or not. Maybe it's not about intelligence. They don't even have the hubris. I mean, I think they're very self-confident in the dollar's position, and they don't think there's anything that could upset that. So I don't think they're planning for a reality that they think has zero probability. They're very arrogant in this respect. And again, I think they overestimate the importance because they think that the rest of the world needs us, that they need our dollars, that they need our consumption, that we, without them, they're ruined. Right? Because we're the only ones that can buy what they produce. We're the only ones that can borrow what they save. I mean, this is nonsense, obviously, but a lot of people believe this. And so I don't think anybody is going to be worried. And if you look at where the national debt is, it's $35 trillion almost. People have been very, concerned about the debt, at least people like me, since it broke $1 trillion in Ronald Reagan's first term. In fact, Reagan was concerned about it before he was elected and was critical of the budget deficits and the national debt under Carter. But if you're in Washington and you've seen the national debt go up 35-fold, and as far as you're concerned, there have been no consequences, no adverse consequences, well, then why should there be in the future? I mean, it's gone on so long, why can't it go on indefinitely? If the people who were worried about the deficit when it was at 5 trillion, 10 trillion, we didn't do anything about it. Now it's 35 trillion, and none of the bad stuff that people were worried about has happened. Look, the stock market's at a new high. Unemployment is, below 4%. Everything is awesome. So why should we do anything about the deficits? Because they clearly are not a problem. Because look how big they are, and, and everything is fine. And so, to me, it's like, somebody that's smoking cigarettes and the doctor says, you got to quit those cigarettes, you're going to get cancer. But, they keep smoking and they don't have cancer. They don't quit until they go to the doctor and he says, hey, you got cancer. And then it's like, oh, shoot, I better quit smoking. Well, it's a little late for that, right? You should have quit a long time ago. But, you think, well, I haven't developed the cancer yet, so I guess I can keep smoking. So by the time we get the crisis, it's too late, to fix it, right? That ship sailed a long time ago.
I couldn't agree with you more. And my last week's YouTube video was talking about how important it is for people who are interested in gold and silver to kind of get on a schedule, because I'm seeing in the comments section of my videos all the time people who say, well, you know what, I'm going to wait for the crash, because when the crash happens, well, gold and silver are going to come down with it. So that's when I'm going to buy. Peter, I'm just curious, what would you say to somebody who is operating on that logic?
Well, if the dollar crashes, then clearly that's not the case. So you have to hope, if you're waiting to buy cheap gold, you have to be betting that the dollar gets more valuable. And I just think that's a slim possibility. I mean, it may get more valuable relative to the yen or the euro, but not gold. I think there's minimal upside potential for the dollar in terms of gold. Yes, there was a brief drop in gold when we had the crash in 2008. But you have to put that in perspective. Gold had moved from 300 to 1,000 from 2001 to 2008. So gold had a huge run. And then it pulled back, 20, 25% with the financial crisis. Then, of course, it recovered and went to 1,900, made a new high. But we haven't had a big run in the price of gold. Gold's gone sideways for more than a decade. We've just broken out of major resistance, and it's not like we're miles above it. I mean, if gold was already 4,000 or 5,000 and you wanted to wait for a pullback, okay, I could see your logic. But we're at 2,300. Where's it going to pull back to? The breakout was 2,000, 2,100. I mean, we're very close to the floor. In fact, I was telling people on my podcast when gold was around 2,000 that was the floor. There are a lot of people who thought it was the ceiling. They were worried about buying $2,000 gold. And I kept saying, look, $2,000 gold is going to look cheap eventually. Don't worry about it. You're getting a good deal. And now it's slightly less cheap, but I think we've broken out. I think 2,300 is the new 2,000. So if you're waiting for a pullback in gold, you could be waiting indefinitely. I would just buy it now. And if it pulls back, what's the big deal? I mean, it's going much higher. You can always buy more if it pulls back and you have extra cash. You can do that. But you should be buying it because I think the downside is relatively limited. And even if there is a crash in everything, right, and the dollar goes up and gold goes down, I think stocks and real estate will go down much more than gold. So in terms of your purchasing power, in terms of your ability to use your gold to buy other assets, you're still going to gain value. But the risk you have by just hunkering down in dollars is that the dollar crashes. We have hyperinflation, and then you got a pile of worthless money. Then it doesn't matter how many you have, you can't buy any gold because nobody with gold will sell it to you for a worthless currency. Now, the dollar may not become worthless, but it could be worth a lot less. Right? Even I was watching on X, even Elon Musk was saying, hey, if we don't do something about the deficits, the dollar could become worthless. Well, we're not going to do anything about the deficits. We've never done it in the past, and we're not going to do it in the future. And again, it's too late to do something about it. It's not like it's getting out of hand. It got out of hand a long time ago. So now all we can do is brace for the inevitable crisis, whether we accelerate it by taking some affirmative action, which we should do, or we just wait for it to happen on its own based on outside forces, which will make it even worse. But there is no easy way out of this, right? If there was, they would have taken it a while ago. So there's only bad choices. It's just unfortunate that the worst choice is to wait for the crisis, which is what they're going to do, rather than make the difficult choice of accelerating the crisis and having it on our own terms.
Before we wrap up, I want to just shift gears a little bit because owning metals is obviously a fantastic way to hedge yourself against these issues that you're talking about and the issues that I'm regularly covering also on my YouTube channel. This is a system that's full of debt, and a lot of it is based on paper derivatives. Now, I turned bullish on mining stocks last summer. And so far, to be honest, they haven't disappointed. I'd love to know if you think we're done seeing gains on the miners, or is this still a trade that people can enter? And what do you think is the best way to gain exposure to this trade, Peter, if you still think there's some gas left in the tank on this one?
Well, I mean, most miners are lower than they were a year ago. I mean, a lot of them aren't even positive this year. The gold stocks have been killed. The sentiment is awful. Even when they beat earnings, other than Newmont had a rise, but that's because it was some idiot a couple of months ago put a sell recommendation on Newmont. I mean, he put a hold on it, but it means sell. And, the stock hit a new multi-year low. And this is while gold was still at 2,000. So no, the gold stocks have not even started to rally. We still have a long way to go to get back to where they were before gold rallied. The markets still don't believe the rise in the price of gold. Investors expect gold prices to sell off and be lower in the future than they are today. And again, that's because they have no understanding of inflation or monetary policy or the real nature of the U.S. economy or the global economy for that matter. So no, I mean, I added to my own position in mining stocks a couple of months ago. As Newmont and Barrick were getting downgraded, I kept buying those names and other names that went down in sympathy. So no, I haven't bought any more in recent weeks, only because I already put a lot of dry powder to work. But if I hadn't, I mean, I could be buying now. I mean, the prices are still extremely attractive, I think, on these names. There's risk involved, clearly. I mean, gold mining companies, they're risky businesses. I mean, a lot can go wrong with a gold mine. So you got to be willing to lose some money when you buy these things. Very different than just buying the metal, which is I think a lot more conservative thing to do. It doesn't have as much upside. It has a lot of upside actually for now, but I don't think as much as you get in these mining stocks. So that's the trade-off. You can get a lot more return if you're willing to take that risk. And that's what I've done personally. So I would encourage people who are risk takers, who believe that the price of gold is going a lot higher, if you're right about that. And the key is that the price of gold has to rise more than the cost of mining it, because that hasn't been the case for a while. Gold prices have gone up, but the cost of getting it out of the ground has gone up even more. So inflation drives up mining costs, but because investors underestimate how bad inflation is, gold doesn't keep pace. Well, that's going to change, in my opinion, and so then you're going to see profits exploding at these mining companies. So people should get invested. I mean, one way they can do it is they can buy my mutual fund, the Euro Pacific Gold Fund. You can buy that fund, no load, EPIGX, I think is the symbol, Euro Pacific Gold Fund. That's the no load version. You can buy it at any of the discount brokers, Schwab, Fidelity, have it on their platform. Or you can actually contact my asset management company, Euro Pacific Asset Management. You got the URL above my shoulder. And we manage portfolios. Some of them are exclusively mining portfolios for people. We also have, broader portfolios, and we manage foreign stocks, value stocks, dividend-paying stocks, all sorts of portfolios designed to provide an inflation hedge, a hedge against a weak dollar, but not just by concentrating in gold, but by taking a broader approach and looking for greater dividend yields that are not necessarily tied to the price of gold. So you don't want to have 100% of your exposure in gold, but you don't want to have zero either, which is what most people have. So you want to have some money there, especially now, I think, given how much potential there is for the price to go higher relative to the risk that it goes lower.
And for everybody watching the video, I'll leave the links to that in the video description below, just in case you want to access that and check it out and, get behind a lot of the things that Peter's saying here, because, I can say that I've been a fan of yours, Peter, for years now. Again, I'm humbled. Even I was a little nervous during this interview having you on my channel, and I really appreciate the fact that
That's
you came
very
on to
flattering.
support
Thank
us. To support a small guy like me. Really, I'm really humbled, and thank you so much for joining. Is there anything I guess you would like people to also follow you on Twitter? I know that's a really great place. You're very active there on Twitter, so they can find you just under Peter Schiff, right? On X, I should say, right?
Yeah, that's my handle. Remember, it's not Twitter anymore, it's X. And so, yeah, so my X handle is at Peter Schiff, and I'm pretty easy to find. I have just over 1 million followers there, but I've got over 500,000 subscribers to my YouTube channel, getting closer to 600,000. So you should subscribe there. That way you'll get alerts not only when I post my podcast on YouTube, but also to other videos that we post on the YouTube channel. You'll get a reminder when I do that. So follow me there, and I've got stuff going on Instagram and TikTok and Facebook, so you can go to all the various social media platforms and follow me and try to encourage people that to follow me, because I think I have a very important message that needs to get out. It's not out in the mainstream media. It's dominated by Keynesians and a bunch of people with an ulterior agenda to promote a false narrative of the strength of the economy and the omniscience of the Fed and everything is great. And so if you really want to get a better take on what's happening, remember the 2008 financial crisis caught the mainstream media, Wall Street, academia by complete surprise. I was out there warning about it for years. I wrote a book about it, predicting the financial crisis, blaming it on the Fed and the housing bubble and Fannie and Freddie. And I mean, I nailed everything that happened and why it was going to happen. But I did it years before it did happen. And after it happened, the government and Wall Street acted as if nobody could have seen it coming. Like, oh my God, this came out of left field. Nobody could have predicted this. This was just a 100-year flood. So you can't blame anybody for missing it. No, it was obvious. It was almost impossible to miss, yet they missed it. It was like, it's like a weatherman. There's a hurricane right off the coast, and you can see it, and you can already feel, and you're predicting that it's just going to be a sunny day. Don't even need an umbrella. And what we're facing now, this is an even bigger financial storm just off the coast. The coming dollar crisis, a sovereign debt crisis. This is worse than just a garden variety financial crisis. This is so much bigger. The stakes are so much higher. Yet the same people who were oblivious to that crisis are oblivious now. I mean, Jerome Powell just last week said he didn't even see signs of stagflation. This is the same guy that
I don't
said
see the
inflation
stag
was
or
transitory.
deflation, he said.
Yeah, he said there's no stag and there's no inflation. It's not just stagflation. It's an inflationary depression. That's how bad it is. There's so much stag. There's so much inflation. Yet he can't see any of it. Just like when Ben Bernanke said, well, subprime is contained. But before he said it was contained, he said it wasn't even a problem. And then after it blew up, he said, well, don't worry, the problem's contained. And then we had the financial crisis. So none of these guys got it. And they still don't get it. And that's because either they don't understand economics or they're just lying. But either way, you're not going to get the truth from the mainstream. And so you got to look to guys like me. And I'm not the only one, but I'm a source. And you can get it on my YouTube channel and my social media, and by listening to the Peter Schiff Show podcast, which you can do on my YouTube channel or at schiffradio.com.
Thank you so much, Peter, for sharing your wisdom with my viewers. And I'm certain that each and every one of them is going to come, if they're not already watching you, to watch you now, because that is really, some fantastic insights you shared with us. So thank you again, Peter, for joining me.
And thanks again, Roger, for having me on, and good luck with your podcast and building up your audience.
Cheers. Thank you. Take care.
All right. Bye-bye.